Welcome to this deep dive. We've got a really interesting collection of sources for you today.
Yeah, mostly articles from CoinMarketCap, all dated around June 8th, 2025. So it's like a real snapshot in time.
Exactly. It gives us a glimpse into what's happening in certain pockets of the crypto world and how it's touching other areas too, like real estate, even traditional finance.
And our goal here is pretty simple, really.
Mm.
We want to sift through these sources, pull out the key bits of info, the interesting details,
Help you get up to speed quickly on what's moving, what matters right now in these specific zones.
highlighting maybe some surprising facts or, what's bubbling under the surface.
Right. So let's just jump straight in. We'll start with something pretty striking out of Dubai. It involves their real estate market. Okay. Let's unpack this first source. The headline reads, Dubai real estate booms hits $18 B sales in May with tokenization surge.
$18 billion in 1 month.
I know, that number just jumps off the page. I mean, that's an absolutely massive amount of activity for any market.
It really is. That signals, things are incredibly hot over there.
But here's the part that really caught my eye, and it's kind of the core insight from this source.
What's that?
It doesn't just say sales are high. It specifically connects this boom to something called a tokenization surge.
Ah, right. And that connection is, well, it's really important.
Why is that?
Because it suggests the source isn't just seeing, like, standard property deals driving everything.
Right.
It implies this technology, tokenization, basically using blockchain for ownership, maybe fractional ownership, is actually playing a real role here.
So how could tokenization be tied to such a massive number? Like, what does that tell you, the listener?
Well, the source links them directly, the boom with the surge. It doesn't map out every deal, obviously.
Sure.
But it suggests that maybe this tech is making things more liquid, perhaps allowing more people to invest through fractional shares, or maybe just making the whole complex buying process smoother, faster.
Right, streamlining it.
Exactly. And the reason this matters is that it shows, at least according to this source, that tokenization isn't just theory anymore. It's being used for huge, tangible assets, like buildings and land in major global cities. And it might actually be boosting the market's speed and size.
So a concrete example of this tech moving beyond just digital coins.
Precisely. Moving from just digital stuff into the physical world in a big way. Okay, so moving on from that really interesting Dubai example.
Yeah.
The sources also give us a feel for the wider crypto market around the same time.
Yeah, definitely. The articles make it pretty clear that the overall market is very focused on the big economic picture. Specifically, everyone seems to be waiting for the US CPI data.
Inflation numbers, yeah. It's interesting, isn't it, how much these traditional economic indicators still seem to, like, pull crypto around.
Totally.
The sources say the market's watching that consumer price index because it's seen as a huge clue for what the Federal Reserve might do with interest rates.
Okay, but let's break that down. Why is the crypto market, which sometimes feels like its own universe, so hooked on what the Fed might do?
Well, if you think about the bigger picture, interest rates really affect how much it costs to borrow money and just how much cash is sloshing around in general.
Right.
So higher rates usually make riskier things, like crypto, look a bit less attractive compared to safer bets. Money might flow out.
And lower rates.
Lower rates, or even just the idea that rates might drop, can do the opposite, make riskier assets seem more appealing.
Got it.
So the sources are implying the market is basically holding its breath, trying to guess the Fed's next move, and that CPI number is a key piece of that puzzle right now.
It just shows how interconnected everything still is, doesn't it? Crypto and traditional finance.
Definitely. And while that big macro picture is looming, we're also seeing, specific coins having their own moments.
Yeah, the articles mentioned Ripple's XRP. Seems it was pretty volatile around this time.
Analysts were apparently weighing in, talking about key resistance levels.
Which are basically price points where selling might pick up, right?
Exactly. And just general sentiment towards XRP in early June 2025. So even with everyone watching the Fed, the day-to-day trading analysis for specific assets is still going strong.
Makes sense.
And speaking of specific assets, one source highlighted certain altcoins. There was an article titled, Altcoins That Will Explode in 2025.
Explode always sounds a bit dramatic.
It does, yeah.
It does.
But the article specifically mentioned BlockDAG, Cosmos, Aptos, and AVA.
Okay, but why those? Did the source give any reasons beyond just hype?
Yes, and that's the important part, I think. It didn't just say buy these.
Good.
It said they're gaining ground because of, and I'm quoting loosely here, Real signals, ongoing development, and expanding ecosystems.
Ah, okay. So fundamentals.
Exactly.
Yeah.
The source frames it as being about actual progress, building tech, growing their communities, not just market buzz. Which is, an interesting perspective to see highlighted for these specific coins. And there was also a quick mention of SUI price predictions, noting some mixed sentiment after hack fallout and something called the Kubetics wallet.
Just shows how fast things move, right?
Right.
Specific events, new projects, constantly shifting the landscape for individual coins.
Absolutely.
All right, let's shift gears slightly. Let's look at some of the uh, key people and maybe companies making waves in this market snapshot.
Yeah, this gives us a peek behind the curtain at the strategies and maybe some of the risk-taking involved.
So one thing that definitely stood out was about someone named James Wynn, described as making a bold 40x BTC long.
Oof. Yeah.
The article calls it a high-risk Bitcoin position and says it's stirring market discussions.
Okay, so 40x long, that means using a lot of leverage. Basically borrowing big time to multiply your bet that Bitcoin's price is going up.
Which sounds great if you're right.
Exactly. Huge potential gains. But it also massively increases the risk. If the price moves against you even a little bit, you can get wiped out, liquidated, lose the whole position.
So high risk is putting it mildly.
Pretty much. And the fact that the source says it's stirring market discussions, well, it suggests these kinds of super leverage individual bets are still a very real, talked about part of the market. High-stakes speculation is still very much alive.
Interesting. And then on the company side, we got some insight into Tether, which is obviously a huge player in stablecoins.
One of the biggest, yeah.
The sources mentioned their CEO, Paolo Arduino. Apparently, he snubs IPO, saying the company has no plans to go public.
Right. And that's really fascinating when you put it next to their main competitor, Circle, the SDC issuer.
Because
Circle just went public on the NYSE, according to the source. So you have the biggest player, Tether, actively saying no thanks to the public market route that their rival just took.
That definitely sends a signal, maybe about wanting less scrutiny or staying private for strategic reasons.
Could be any of those. It's a major strategic choice, whatever the reason. The source implies it's significant.
And then Arduino apparently dropped this quote, saying a $515 B valuation is a bit bearish for Tether.
Yeah, that was kind of wild, isn't it? $500 billion. And he's saying that might be low.
Seriously?
As reported, that quote gives you this incredible window into their internal confidence, how they perceive their own value and potential.
Positioning themselves as maybe worth way more than even that huge number.
It's a bold statement. And these details together, the no IPO, the valuation comment, they offer a rare glimpse into the thinking at the top of these massive private crypto companies.
Okay, so let's try and weave these threads together. We've seen this surprising real estate tech adoption in Dubai.
Right, tokenization playing a role in that $18 billion sales month.
Then the broader crypto market watching global economics, like US inflation data.
And how that might affect the Fed's interest rate decisions.
We saw specific altcoins like Blockdag, Cosmos, Aptos, Aave getting attention for supposedly fundamental reasons.
While XRP deals with its own volatility and analysis.
Plus, you've got high-stakes traders like James Wynn making these leveraged 40x bets.
Stirring up discussion. And huge stablecoin companies like Tether making big strategic calls about staying private and signaling massive self-valuations.
So what does this mix of news, all from around June 8th, 2025, tell us about the state of crypto based on these sources?
Well, it clearly shows a market that's not just one thing, right? It's complex.
Definitely. It's still very much plugged into traditional finance, reacting to things like potential Fed moves based on CPI.
But at the same time, like we saw in Dubai, it's pushing into the real world with its tech, integrating with huge traditional assets like property.
And you have these different layers of activity. Some focus on fundamentals for certain altcoins.
While elsewhere, you still see that highly speculative, high leverage trading grabbing headlines.
And the big established crypto companies, the private giants like Tether, are navigating their growth, making major strategic moves that signal their confidence and direction.
Yeah. So understanding these specifics, seeing this snapshot from the sources is valuable because it shows you all these forces acting on the market at once.
It's not just one simple story. It's this constant interplay, macroeconomics, real-world use cases, individual coin stories, speculation, corporate strategy. It's all happening together.
So just to recap, we journeyed through these sources today, starting with that huge $18 billion Dubai real estate figure and its link to a tokenization surge.
Then we looked at the broader market's focus on US CPI data and the Fed, plus specific altcoin news around XRP, BlockDAG, Cosmos, Aptos, Aave, and even a mention of SUI.
And we touched on key players, traders like James Wynn making that bold 40x Bitcoin long, and companies like Tether, with the CEO reportedly dismissing an IPO and suggesting a half-trillion valuation might be low.
It's quite a mix of developments from just a short window of time.
Definitely paints a dynamic picture.
So as you think about everything we've covered from these sources, here's maybe one final thought to chew on.
Okay.
We're seeing this simultaneous push towards real-world integration, like the Dubai real estate tokenization, which feels like, a step towards maturity, towards mainstream adoption. But at the very same time, we see the persistence of really high leverage, high risk trading, like that 40x long getting attention. So what does this duality, this kind of tension between mainstream integration and high-stakes speculation suggest about where the crypto market is right now? What conflicting forces might be shaping its evolution based on what these sources are showing us?